I talked to Mark Nejmah, who is once was the $7 million owner in shares of BNGO, and he told me why he sold out. It was not good. And I must tell you guys, brace yourself. It didn't affect me at all. Sorry for the cliffhanger, boys. But yeah, what he told me, his reasoning for selling out, did not affect me at all because I think he's fundamentally flawed in his bearish thesis on BNGO. In my opinion, and I'm going to give you perhaps the biggest reason today on why I'm still holding the stock. I don't think he is grasping all of what I'm going to tell you today. And one of the things we're going to do is, well, obviously tell you all the juicy details on the phone call, because I spoke with Mark a few days ago, and I love the guy. I really respect the man. I really respect him. But I fundamentally disagree with why he sold the stock. So we're going to talk about that. And I also want to remind everybody why we bought this in the first place. Those reasons haven't crumbled into dust. They've remained, and the hype has died out slowly. People have panic sold. Pain has been endured. The gates of hell have opened, and they've almost shut, locking us in pain, torment for eternity. However, it's not over. Today, I'm going to show you the revenue growth. Very simple. Didn't take me long to figure this out. Didn't take me long to get the information I was looking for. And I want to remind everybody why BNGO is so likely to grow exponentially in the next few years, especially long term. If you're like me and you're going to hold for a decade, sure, it's kind of a penny stock. Yes, it technically anything under like $5 is a penny stock. Okay, yes, it's high risk on paper. On paper, it is. I'm going to tell you today some things you would not want to go without knowing if you're an investor or potential investor in this stock. Okay, so that's what we're going to do. We're going to do number one, we're going to tell you about Mark Nejmah. Number two, I'm going to show you just a quick financial thing, which is key if you're going to be an investor and you don't want to sell, but very simple at the same time. And then the third thing we're going to do today is look at the technicals and my short-term bold prediction. If you don't like what I say, fuck off. So first thing, Mark Nejmah. So basically, I got him on the phone. He told me why he sold. And before I tell you the exact reasons, I have to say right off the bat, I'm sorry, skip forward 30 seconds if you don't want to hear this. Right? I'm sounding like a normal YouTuber. You can probably tell in the tone. But he is a great guy. I like him. We have differences of opinion on things in the stock market. I don't mean to disparage Mark. I love the guy. I've talked to the guy in person. We met and we had a great interview. Great video we did. I've talked to him on the phone. We've worked together. I love the fucking guy. The guy is amazing. All right. But when it comes to his specific opinion on BNGO, currently, we're not seeing eye to eye. Okay, so he met with the CEO, right? So Mark and Eric Holman, they met. Mark has told, I'm trying to pick my words carefully here. Sorry, but Mark has told me for the longest of times, and if you watch his channel, here, I'll go ahead and go to the channel right now. Newsweed is his channel, if you don't know who I'm talking about. This guy right here, this guy used to know, or this guy used to hold like $7 million worth in shares. Okay, so what I'm trying to tell you is when this guy met with the CEO, he essentially based his conclusion entirely on intuition. Okay, that sounds really abstract. Let me go deeper, because trust me, this is actually pretty big. At least I think it is. The guy is always big on feel, right? He uses that word a lot, feel. If you watch his videos, he didn't like I don't like the feel of the company. Eric doesn't feel right to me. The vibe, the energy, the air was off. That's kind of what kind of an investor Mark is. He doesn't look at necessarily the product and doesn't kind of try to gain a deep understanding of why the market value is higher than, you know, the competition. He doesn't necessarily look at the financials either. He looks at how the people that make up Bionano Genomics operate. He sees if they're wearing a smile in their day-to-day. He looks at the way they treat each other. Like, for example, one of the things he told me was, roughly paraphrase, no one looked Eric in the eye in the duration of my meeting with Eric. That's what he said, paraphrasing again. And he's using this as a reason to kind of establish this idea that Eric is disliked by his employees. And I'm not trying to put words in his mouth. I'm trying to do my best about not letting my bias kind of affect my recollection of our phone call. But what the guy is essentially doing is, in my opinion, putting too much stock into, maybe that's not the pun, not intended, putting too much value into the friendly and business relationships the employees of Bionano have with each other, right? He's not looking at the financials. He's not looking at the Sapphire or why the genomics field is so likely to blow up in the future, and blow up in a way like, you know, going up. So, in a word, that's what it is. Mark is selling out because he met with the CEO, and the CEO didn't seem very enthusiastic. The people around Mark, or around Eric, Mark said none of them really reacted positively or were treating Eric with a lot of admiration, right? It wasn't, I think what Mark was trying to find out was he was looking too much for the warm, amiable, you know, friendly kind of college dorm room setting. Okay, maybe that's not the right adjective there, but you get what I mean, I hope. What he needs to look at more is this right here. Okay, 73% year-over-year revenue growth. If we keep this up, it doesn't matter if the employees don't like Eric. It doesn't fucking matter, because we're going one direction. We got 187 million in cash still. And so, to sum up one more time, and you guys can ask me specific questions on this phone call with Mark. I'm sure we'll be bringing it up several times in the future, but yeah, I'm not going to, maybe Mark and I will be in touch, I assume, in the future, so we can do more kind of, maybe we could do a debate. Hell, maybe we can do a live debate. We could probably set that up on the channel here, do a video about a bear and a bull debating if BNGO is going higher or not. That'd be pretty sick. So, but you can ask me specific questions on that, and I can answer them as best I can. But anyways, to the second topic of today's video. And to summarize one more time, because I understand this is an abstract thing, I'm trying to recall what Mark told me about what Eric told Mark in a meeting that was months ago. But in a word, my takeaway is this. Mark sold out because he's looking at the wrong things, and he's putting too much stock into how Eric speaks, his demeanor, his mannerisms, his tone of voice, how the other employees respond to him. He's not focusing on the words Eric says. He's focusing on the way Eric says them, right? He's not taking into consideration the content. He's just looking at the vibe the content was presented in. I hope that makes sense. Now to the revenue. If we look at Yahoo Finance here, I just have one very simple point to make. If we look at the 2020 revenue for BNGO, and this is in millions if you're new to Yahoo Finance, this is in millions, right? So for 2020, our total revenue from BNGO, $8.5 million. Of course, gross profit is a much different thing. Okay, this is just the total amount of revenue we're bringing in. This is not tax or anything. Okay, but look at the difference between 8.5 million 2020 to the 12 trailing months. This TTM, the 2021 it's an important statistic, but this is more important because this is way more recent than 2021 as a year. This takes into account the last 4 quarters reported, right? So this is taking into account the first 2 quarters in 2022 this year, of course. So 23, just take a second to let your mind wrap around how crazy of an increase that is. That's more than a 100% increase. We went from less than 10 million to $23 million. That is mind-blowing. And you may rebuttal and be like, Brandon, come on, this is the big news you have on the fundamentals. This is the best due diligence you can do. That's literally like pretty much expected revenue increase. Like, this is why the stock went up from like 40 cents. Like, what are you talking about, Brandon? What I say is, dude, it's not about what we did compared to the expectations. Not in this context, not in this, not if you look at it like how I'm about to show you. The key here is the trajectory of revenue growth. If we keep this up, which we are, I mean, I'm not going to give you like a percentage that we're going to continue climbing at, but I am going to tell you concretely, this is roughly the trajectory you're going to see. 8.5 million, 17 million, 23 million. And remember, this is not the, this gap right here will be much bigger come end of year. The 2022 difference, it will be massive. Okay, it will be massive. It will probably be another 100% year. It could be 150%. It could be even 200%. Okay, given the quarter 3 and quarter 4 it coming up. Okay, so look at the trajectory and look at the growth we are expected to get. And I'm not going to go into depth. This video is already pretty long, and I know many people have already lost faith in me, so they're probably already... So I'm not going to, because of the length of this video, I'm not going to go into depth. I'm not going to go into my rebuttals to the potential counter-arguments of gross profit, expenses, keyword expenses. Like, this is crazy. $80 million expense. Yes, this is crazy, and we are losing a crazy amount of money. However, this kind of brings me to my second point, which is not even my only point in regard to this kind of criticism of BNGO, or the bear thesis, if you will. Look at our cash on hand. That doesn't look as sweet as the 330 million it was, but it still looks pretty damn sweet. We're only growing. We're only getting bigger. We've got 73% year-over-year revenue growth, and that's just for the quarter. That's just for the quarter, man. Now, Sapphire machines, we did 20 Sapphire machines in quarter 2, 2022. We only did 12 in quarter 1, which is really not what I wanted. That's not good, to be honest with you. That's not what I wanted. However, 20 this recent quarter, that is good. And the fact of the matter is, as long as we're getting a lot of systems sold, not even a lot, just around 20 a quarter, and, you know, going up 25, 30, maybe, you know, 50 a quarter next year, 2023, beginning to reach that mark, and then triple digits pretty soon after that. As long as we're doing something like that, it's going to be over. And the reason why I say this is economies of scale. Okay, if we look up the definition of economies of scale, this is essentially means the cost advantages companies achieve when production becomes efficient. And the key word here is, well, this is actually isn't, well, let me just put it to you this way so it doesn't get confusing. The older a company gets, the more likely it is that they're going to experience economies of scale. The bigger the scale of operation gets, the better our cost advantages get. And this is because of many things. The learning curve, for once, right? The learning curve is a beautiful law. It's like the Pareto theory. If anyone knows the Pareto theory, you should look it up, Pareto. As we get bigger, our expenses are going to go down. Okay, I'm not saying that next quarter our operating expenses is going to be lower than 80 million. No, I'm not saying that, but I'm just saying we're going to handle it better, right? Compared to the revenue growth, our expenses growth are roughly going to decrease in the long term, and that is what's going to achieve. That's one of the big reasons why profitability is going to be achieved earlier than people think, in my opinion. So, and this is a discounted cash flow model right here, by the way. This is old, not updated. This was created last year, so this is not updated. But the point remains the same. Profitability 2024. That's what this one is predicting. Profit loss. This green margin right here. The fact is, nano nozzle comes out. Sapphire 2.0 starts kicking ass in 2023, or a buyout happens, or some, well, buyout, that's amazing, but that's a different kind of scenario. But what I'm telling you is that there are so many things that can happen to this company that it will just expedite this profitability 2024 by so much. And the reason for that is because it is a high-risk stock, and because we do have a high potential for reward. We have a chance for the Sapphire. We have a chance for crazy Sapphire adoption. And we have NX Clinical, we have Illumina, we have a buyout potential, we have a ton of good stuff coming. And a ton of good stuff, good potential, I should say. I'm not predicting a buyout. But anyways, that's enough talking about the fundamentals. You get me in front of a microphone and some BNGO tabs, and I can find pretty much anything to go off of. But let's go to the technicals now. All right, so for the technicals here, I believe last time I said this is the trend line we need to hold. We did not hold that. It did prove to be a real trend line because we confirmed it several times. It was support. We bounced off it several times, and then this is kind of the recent time that we haven't, these few days right here, we broke below it, confirm, we get rejected both times, then we get lower, and then this is the real confirmation right here. We tried to push above it. We get a, what is that, a reverse hammer candle, I think you call that. This one right here serves the same purpose, very bearish. Okay, the buyers try to push the price up, the bears end up winning and closing right at the end of this wick here, and then it gets bearish after that. And so we're not looking too great based on the trend line. But I have something to tell you guys. We are at a key, and I kind of said this last time, but it's true again. We are at a key level right now. So next week, it's I think for short term at least, it's very important whether we are going to have a big green day or a big red day, right? If we stay roughly the same, 1% up, 3% up, just kind of staying in this 2.3 to 2.5 level. 2.5, that might be a start of a breakout, but roughly around where this candle was to open the close here on the 2nd of September. This is our support. We are right now dwindling on the support. We need to hold this support right here, because guess what? This could be the start of another cup and handle. That might sound a little fucking crazy because it's super early, but dude, imagine if this was a cup and handle right here. Imagine that, and then you get the handle right here, and then boom, the price target would be way up at like $5-6. Now, I'm not saying that's about to happen, but right now from the charts on the daily and the 4-hourly, you could, it definitely looks a lot better on the daily, but even on the 4-hourly, you can see it. The daily, this could be another setup for a cup and handle. If it is, I really doubt that we could go much lower, because, I mean, yeah, we do have some supports here, but we're going to get dangerously low to making a lower low, and that's just, hell. That's just bearish as bearish gets, and the lower we get, the worse the articles get, the more the panic starts, and every time a stock goes low, it goes lower. It goes lower than it should. Every time a stock goes high, it goes higher than it should. That's basic market psychology. But so all in all, in a word, my prediction is if we can hold this level right here, roughly 2.3 to 2.4, and start moving up here, confirm this as support, this could be an amazing cup and handle, but who knows? I could be way off. And with that being said, thank y'all so much. Here, let me go ahead and show you my shares here. make sure I'm not selling out or anything. You guys know I'm not selling out. I'm never selling out. Never selling out. I shouldn't say that, but you know what I mean. It's going to take some fundamental earthquakes in the company, right? It's going to take a literal volcanic eruption to just burn Bionano's headquarters to the ground for me to sell. Okay, because the fact is, right now, the growth potential is there. I think it's a high chance of happening. I don't know when. Bionano's crazy. It's a fucking crazy hot chick, right? When she wants to get together, it's like, hell yes, but when is that going to happen? You have no fucking clue. So, I could be wrong. This is not financial advice. Thank y'all so much. I think I'm going to stream. Feel free to get out of here if you haven't already, but I think I want to do a live stream again. I think the problem is I'm going to be in the dorms, and I have none of my equipment. I don't want to stream on shitty audio and even shittier webcam quality. That is going to be ass for you guys. So I think we're going to do a stream. You know what? Actually, maybe Tuesday. That might be a perfect day. I want to do a live stream Tuesday, I think. And we'll do some price action because I want to get to know you guys again, man. It's been a while. I want to hang out with y'all and do the live chat, answer the questions, see what's going on in y'all's lives. You know what I mean? So, anyways, feel free to buy the book. Free on Kindle Unlimited, free preview. You can see if it's good before you buy it. Might as well give the first page a read. If you like fantasy at all, I guarantee you'll like it even if you don't. If you give it a chance, that's my guarantee for you, my friends. Anyways, with that being said, thank you so much. This is not financial advice. There's my account. That's how you know I'm still bullish. I'm not lying. Fuck you if you're a hater. I don't care. I don't give a shit at this point. I don't give a shit. Thank you so much. Not financial advice. I'll see y'all in the next one.